Hey everybody, hey traders, welcome back. It is Thursday, the 23rd of January. Welcome back to the final hour. My name is Chris Pulver. Nice to be with all of you. If you're tuning in from my personal YouTube channel, say hello. If you're tuning in from Financial Wars, say hello. I'm going to look and see, where am I at right now? We have 8,600 on the personal, and we have a big old number on the Financial Wars side. I think we have 116,000 followers. So yeah, if you're out there, type in a wire yes. And if you like the content, you can always hit the thumbs up button, leave some comments. If you're watching it live, join the chat. If you're watching it afterwards and recorded, then leave a comment. Okay, happy Thursday. Let's get cracking into today. I got a bonus trade if anybody's interested. I threw it in my portfolio today. I have a trade on AT&T that I took for a run back into like the $28, $29 zone. This is a combo kind of dividend play also. I owned AT&T back in like the $15, $16 zone, picked it up towards 22, got it called away with a nice call at $22, and that was a nice little $7+ per share move. It's cheap enough that I took the trade. I looked and evaluated AT&T versus T-Mobile. T-Mobile's probably better on paper as far as I'll just show you right here. So AT&T on paper, current price $22.32, fair value $60. I like that a lot. Price to earnings fairly low, so 18.1 price to earnings for a value play. That's a bit higher, but compared to peers, peer average 20.5. AT&T is 18.1. T-Mobile 24.4. We got Verizon 16.7. So Verizon has earnings on Friday. AT&T has earnings next week. T-Mobile has earnings, I believe, next week. So what I'm doing on AT&T is I bought it's a January 2026 22 call. So that is a expiration. So buy the $22 call, and then I sold a 25 put, and I sold a 22 put, and I sold a 20 put for a net credit of $3.65. So the way that trade works is I wouldn't mind taking some ownership of AT&T. I'm looking at this stock overall to go. Let me change the color. If we pull back into, let's say, $20 support or $18 support, something where if we have any pullbacks, I'm looking to see if this will make its way up into these previous highs. There's just a nice big range trade on AT&T. Now, I'm not going to see a ton of premium for this as far as, crazy amounts of volatility. I'm not selling with a high implied volatility, so my IV rank was quite low. But for my puts, I would say income-wise, if price is greater than, right, if price is greater than 25, then I don't have any assignment, and I keep the full 365 credit. Plus, I may see the appreciation on the call side because that debit was a couple of bucks. I think I got in for, maybe $2 and change. Let me check and see what my AT&T was. So I bought the $22 long call for $237. So anything above, so 222 plus 237. So if price is above 24.37, I have real money on the trade. If we get up towards $27 to $28, that'd be great. If my break even is 24.30, so let's just say we hit 28. Okay, let's say I get 28. So I make 363 on the call side, and that would be divided by 2.6 or 3.7. So that turns the call into 153% return on risk, while also not taking on any assignment at the 25, 22, and 20 put, which would give me another $365 of profit on top of the, what would that difference be? The 363? So if I have 363 on the put plus 3.65 on the call, I make $700 on this trade overall. So not too shabby. Just a little income trade, no big deal. And if I have some shares, I have some shares. If I get assigned the shares, I would take ownership at a cheaper price. I would have the break even in between 25, 22, and 20. So 25, 22, and 20. Divide that by 3. If I took on all 300 shares and I was willing to keep those 300 shares, my break even is 22.33. But because I collected 365 credit, 365 divided by 3, because I take 300 shares, is $1.21. So $1.21 minus the 22.33 puts me at a break even of 21.11 if assigned. So 21.11 would be my break even if assigned on all sell put levels. Okay, so that is a trade that I put in for AT&T. Now, I did put in a hedge trade on the SPY. So we're trading at 607 right now. We might get up to 610. We might poke all-time highs, and the market might celebrate. Maybe that all-time high. There's the the old historical adage, which is momentum begets momentum, and all-time highs typically yield more all-time highs. I'd like to say I'm a believer of that, but man, I'm looking at some momentum oscillators and some divergences up here that would basically be textbook divergence, and I could see a total bull trap, a total bull trap at the top. And again, I could be dead wrong and this thing goes higher, but here's the way I look at it. If this market goes higher, okay, if this market goes higher, the tilt of my portfolio is bullish. So I benefit from the gains. If the market goes higher, I benefit from the gains. So what I'm looking to do is if this market doesn't go higher, I want to make sure that I have some type of hedge exposure that at least allows me to make some profit along the way. So the trade that I took with a hedge, I'll go back to the daily time frame here. And this trade is out to March, so I'm giving myself plenty of time in the trade. But basically, this is the deal. Now, if this trade happens to come to fruition fast, I think I can still have enough profit out of it. I'm hoping that there's more of it. But the trade that I did was this. I sold. So I bought the 605 put, and I sold against it the 585 put. And I got into that trade for $4.75 debit. So that is a $20 max credit, and that's going to be at expiration with SPY less than 585. Okay, so is that probable? Anything's possible, but I would say if this market decides to go, let's say we poke the all-time highs and then we start to turn south. All I'm really looking for is, do we fill gaps, right? I mean, do we fill a gap right here? 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 The way this just got there in the last, week and a half, 2 weeks of trading is kind of silly. Like this looks a lot like something like this, where you've got this, momentum trade, and then it gets faded pretty hard. You get this momentum trade, it gets faded pretty hard, right? Momentum trade gets faded pretty hard. So with that type of one-sided direction, I wouldn't be shocked if the market does kind of top out in here, maybe pokes those all-time highs, like I said, but tops out here, and then we get like a gap fill candle and then more follow through, and we're just stuck with a market that looks like so. Here's a resistance level, here's a support level, and the market just chops around, and there's a lot of uncertainty. Maybe the market's like, you know what? Prove to us that we can go higher. Prove to us we can stay at these valuations. Prove to us that inflation is going to improve, right? I don't know. And maybe the market doesn't care. Maybe the market doesn't want to be proven anything. Maybe the market's like, we're going to price something in. But what are they pricing in? If they want to price in all the uncertainty, well, I guess they're going to have to move lower. If they want to price in all this optimism, well, I guess they just moved higher. So I think we're stuck between, what's the market want and what's the market reality currently sitting at, and I don't know. So I mean, we have a bit of a quandary, and let's see what the market can do. So I think upside is potentially limited. I don't know what the catalyst is to necessarily drive this into a gap fill, but next week could be that trade. Right? Yep, I'm still in that trade as well. That's out to March. So my hedges are out to March, and I'll show you where they're at. So I've got these March hedges. Let me go SPY here. This is the trade that I took. So a 605 long put, 585 long put, or I'm sorry, a 605 long put, 585 short put, which creates a bear put spread for $20. I paid $475. So I mean, the reward to risk is really solid on that trade. I'll happily take the $15, $16 net profit. And I still have the other hedge as well, where I did, where's my other hedge trade? Which one is it? SPY. Let me go into the history here. I know it's out to March. I just did a bear put spread into March. So that's the same trade I just took. That trade is still running. That's fine. Okay, 610, 615. Got it. That's out to Feb. Got it. Let me go to the other hedge trade in March. So SPY out to March 31st. I've got the 605 by 585, and then I have the 590 by 570. So these 4 trades right here, it's 2 of them together. So I'll type it out. So I'm still in the hedges. Yep. So all my 331 expiration. I have the buy the 590 put and sell the 570 put. And then I also added another hedge. I bought the 605 put and I'm selling the 585 put. So net on those positions, let me figure out what that one cost me. The 590 by 570, let me get that leg right here. So the 590, 570, that's 1226. 1226, 724, cost me $5. Okay, so I've got a 502 here. That's a 502 debit, and this is a 475 debit. So both of these are debits. So I'm risking $9.77 for a potential payout of, let me find the risk here. So I'm risking 9.77. That's my max risk for a $40 max profit. So if it works out in my favor, it works out pretty darn well, where return on capital is pretty good. So if I hit both of them and they're both right, that's cool. $40 minus the max risk. That would be, that's a 409% return on risk, which would be pretty nice. Actually, that's not accurate because I have to take the debit out. So 40 minus 9.77 would be my net profit out of the debit, 309% return on risk. So it's doable, but what do we need price to do? I mean, I need price to fall, and I need price to fall like, pretty aggressively over the next 67 days. So it's not a bad trade. Like I said, if the portfolio is tilted bullish, which mine is a little bit, then I'm looking for ways to hedge and protect and also offset some of the downside if needed. So if I've got 11 accounts and I can turn what was that net position there? It'd be like $3,000 on 11 accounts. I mean, if I make $33,000 in hedge profits, that can help offset some of the drawdown, right? And that's what I did a lot last year. And, I did it pretty consistently every like 45 to 60 days. It paid well in April. It paid well in August. It paid well in September. It paid well in December. It didn't pay well the other months, but those were, small fractional hedges. And I probably, gave the market, let's say 2.5%, 3% of my upside gains to sacrifice for, 30, 45, 60-day hedges. But I would take that when I can also protect the downside. Okay. So that trade is still in, a couple of safety nets there, and some hedges on the SPY. I don't think that's a bad trade. But if you're not interested in hedging, then don't take the trade. All right. But that's a trade that I'm in. Posted another trade in AT&T. I put in a trade on when we were in the live session this morning. I posted a trade on Airbnb. The ticker is ABNB. I did a ratio spread there for a couple $100. I also put in my first Japanese yen futures trade this year, and I've been watching this one for a while. We have the Bank of Japan coming out tonight with what is forecasted to be a rate hike. And I know that I may be early to this. I'm going out as far as I can in the futures contracts, which is September. And all I'm looking for is, if the Japanese yen gets stronger, and again, I don't know if it's going to be a combination of them raising rates while the central banks are pausing or cutting, or if we start to see a risk-off environment where the Japanese yen starts to get stronger. But basically, if we get up to this level here or higher, then I have two positions running. I am long on FXY, and I'm also looking at this Japanese yen futures trade out to September. I have a risk of $687 for a max profit of nearly $1,200. Now, the reality is I will probably not get that full profit because I'm likely not going to wait until September. If this thing starts to go higher faster, I will take the $600, $700, $800 of profit as opposed to trying to wait all the way to full expiration and full credit. But I am trading the Japanese yen. I'm also watching to see if it pulls back a little bit more. Let's say the Japanese yen gets a little bit weaker. If it gets a little bit weaker, okay, fine. I'll be looking for some type of falling wedge, and I'll probably look at some type of, similar trade, similar mechanics, but looking at the same thing. I'm actually hoping that I can get a better trade in the futures market because only going out to September kind of sucks. I would have been happy to take this trade out into like January, March of 2026. Eventually, if we start to see additional option contracts, I may take that trade as well with some asymmetry. But until then, I was basically given the option of you can trade to September and that's it. So I did. It's a debit spread, so there's no assignment risk. And the reward to risk, I took the trade right here. So you can see the mechanics. I am taking the trade with a 1187. Circle this in yellow. 1187 is my profit. 687 is my risk. Only required about $800 in buying power. And I know that I'm early, but if anything from now until April, May, if we have another hiccup like we did last year in July when the Japanese yen was basically deleveraged very quickly, something tells me that if we don't see a pullback early, if we don't see a pullback like Q1 of this year, something tells me we might be in for like a second half bubble. So I'm talking like indexes. So if we don't see, this thing pulled back to a 100 period moving average. We still have a 300 plus bar count. I think this year this 200 moving average is going to get hit. We're at 340 or 320 bars, something like that right now. 307 bars. I'm not saying it has to be a top, but my gosh, we don't see a lot of prices that get this far away without pulling back. So we stretched around 11% away from the 200 moving average, and right now we're sitting around 8%. So could we get 10, 11, 12% to the upside? Yeah, anything's possible. But if we snap back at all, or we put in some type of topping pattern or some type of bearish catalyst that drives this market lower, I would make a little projection of forecast and say that this market this year is probably going to find the daily 200 moving average. So, and again, I don't know the timing of that, but I'm going to be willing to sacrifice little bits here and there to hedge and see if I'm right. But if I'm wrong and all of a sudden prices moving higher and my hedges are worthless, well, I'm still making money here where it offsets the hedge. For me to risk $500 and make thousands of dollars on the upside, it's just the cost of doing business and keeping the hedge and keeping the protection levels necessary, right? All right. Let's see here. Just got long synthetic MDLZ. You have earnings on that, right? Aren't there earnings this week? $56. Let me check this one. This actually, I think the IV is going to be pretty solid. I don't mind this stock. This is definitely in the consumer staples arena. February 4th earnings. Let's take a look at it fundamentally here. Should be like a big fat snowflake. Let's go MDLZ. Yep. So reliable dividend, good value, earnings forecast to grow. That's pretty solid. That's really solid. Holy crap. Yeah, that's really good. So we do have earnings coming up. If it's not next week, but the week after. That's the 4th aftermarket. I'm going to take a look and see. So it's a 90.7 IV. Hopefully that translates into decent premiums. It's also in the consumer non-durables. It's in the consumer staples space, possibly, if it's in that sector at all. But this thing has just been beat up so badly since September. I don't know if you want to flip this and say like, well, it's pretty much what the 10-year yield is doing in the opposite, right? So if yields are going higher, like, staples and justifying like tighter margins, like it could get lower. But as far as a value play, it looks pretty attractive. Also, if I own it somewhere around like the $50 area, we have a COVID crash at $40. So let me see what the premiums look like here. The IV is pretty solid. But yeah, there's a couple ways I could trade this for sure. If I go out to March, what would it be on a rate? I had a feeling like the premium is going to be so bad. If I want to do a ratio spread is just absolute trash. I could just buy a call and sell a put. I don't like that either. That's synthetic long. If I buy a call, sell a put, I'm synthetic long. My risk would be I would take the assignment. So if I get 28 cents credit, I'd own this thing at. That's not that great either. Current price is 56.82. I'm almost better off just saying, look, I'm just going to sell the 55 put for $1.15 and let it be cash secured. So for my margin accounts, that's easy. For my cash accounts or IRAs, I'd be tying up $5,000 for a contract. Just trying to think. If the premiums were better, I would much rather have a. I mean, this isn't terrible. I mean, that's not terrible. But let me see something here. Let me do the math. If I sell the 57.50, so 57.5 is trading for about 215. So I'm getting about $1.30 premium. $1.30 premium on that, which is fair. I think that's fair for going in the money. But this is the trick. If I took assignment, 57.5 plus 55 divided by 2, so 56.25, and then I'd split that. So 56.25. This was T, and then MDLZ would be 56.25. Okay, and then I take the 3 and change credit. Let's say 335 divided by 2 minus 56.25. Come on. So 3.35 divided by 2 minus 56. So I could own the shares at 54.57. 54.57. There's about a 20% chance of assignment here. It's on the lower end of the expected move. We're only looking at, even 57 days out, the market maker move is around $3, which is obviously not a lot. At the money calls, if I own the shares, repairing this thing would be a bit of a pain in the butt, especially if I had to ride this down to, $40. I don't know if that's going to be the case or not, but this stock is down. That little stretch there is down 26%. Let me check something on the weekly. I don't know. I mean, perhaps there's more downside potential. We've got October lows right here. Let's see. Yeah, if it pulls back, then obviously things look pretty good. So, do I think I could repair the trade? Yes. To what degree? If I had 200 shares, I could probably repair it. I try to repair it for like $2 to $5 net, and if that got back to this level or this level, trying to take some ownership around 54. So 54 and get that back to 61 or back to 64. I think those are reasonable profit targets in this little decline. But I've got to be prepared for this thing to maybe drop down to like low 50s as well. So I like the trade. And I'm going to take it. So let me see if I can get in here. Willing to take 200 shares. We've got earnings coming out on February 4th. So let's see what happens. I'm going to take this trade for my portfolio margin accounts. So 1, 2, 3, 4. Those have no issues on this one. Plus, I could buy it no problem. I might throw it in this account and this account as well. Let's see. That one's not too bad. I guess I gotta do it for most of these. 200 shares. I don't want to tie up 10 grand cash though. I don't think the premiums are that great. So I'll whittle that down. So take out this. Actually, you know what? I'll do this. I'm just talking out loud. I'm going to take this for 200 shares in the portfolio margin accounts. So let me see if I can get filled for 337. Bid price is 330. If I get a little bit above that, that's fine. Right now, 330 is my bid. If I get 335, that'd be a little bit great. That'd be a nice little bonus. So let me try this one here. 337 not filling. I would like to at least get over 330 if I can. 335 not filling. 334. Give me a little bonus, would you? I just don't want to take the bid price. 333 not filling. Oops, fudge. 57, 55. Review. Try the 333. Not filling. 332. Hopefully 330 gets filled. Son of a biscuit. 330. Come on. 329. I mean, the 330 bid. Let's go. 329. This is ridiculous. What? I can't even get a bid price? What are you, insane? All right, I'll leave that there. I will leave that there at 3:30 and see if that gets filled. So that'll be a pending order. That's weird. MDLZ going out to March 21st. Looking at the 57.50 sell put for 210 and the $55 sell put for $1.15. So trying to get 330 credit pending. All right, I'll let that one just marinate for a second. If it gets filled, then I'll massage the price a little bit. Probably gets filled at 325 or so, which still isn't a bad trade, but I'm not going to settle for less. Let's go 328. You got to be kidding me, bro. All right, you know what? Screw it. I don't even want the trade. I'm canceling. The other way, if I wanted to get a little crafty, I could do a 2 contracts at the 52.50, which is around a 77 delta, and then I can sell the 57.50 for 1 contract. And most I'd pay is 865, which is a lot cheaper than tying up $5,000. But my max loss is the debit. There's unlimited profit potential. I could be long on the stock. That's not a bad trade if I'm right directionally, but I want to go out a little bit farther, though. I think going out 57 days might be a little tough. Let me see if we get a trade. Let's try this. If I go to the June, so buy the 50 and sell the 57.50. It's a little bit more expensive now, but I'm buying the time. A little bit cheaper there. I like that trade back into like $60 to $64. Max risk is $1,000. It's $950, but only ties up buying power wise $950 of my max risk. So I could take that on a lot of these IRA accounts, and that's not a bad play. Do I like that? Kinda. It's a lot cheaper than owning the stock. Let me see something here. MDLZ. MDLZ. $59. Looking at some liquidity levels. I mean, earnings, this is kind of wild, right? Like a lot of earnings. Dividend. I mean, reasonable dividend. That's pretty high, right? What's the dividend here? Only 3.34? Let's see. Do we get back to 61? Do we get back to 64? Do we pull back? If we have a high, low, do we pull back at all? Do we bottom out and pull back at all? This strikes me as a stock that maybe has to like gap lower, and then we start to fill that gap. So I don't know. I'm going to put this one on the watch list. I spent a lot of time and didn't find a trade that I really loved, but I kind of like this synthetic trade. This is a zebra, so I would buy 2 calls and then sell one against it. I'd buy the 70 times 2 contracts and then sell the 50. That essentially gives me the same as being long the stock with a max debit as my loss. So that's a good way to play this. It's cheap, rather than spending $5,000 on owning the shares, I could just buy it outright. But directionally, I've got to be right. If I'm not, then I lose money. So anyway, all right, I'll clear that for right now. Let's talk some other stuff. So we're creeping back up. Let's go SPY. We're at 608, nearing the highs of the day. Can we get up to 610 by tomorrow? I hope that we can. Did an update for my double up service. Trying to see if we can get up and at least hit the strike or kiss the strike at 610 today. We're close. We're very close on the weekly chart, on the daily chart. Perhaps this market takes it all the way into the end of the month, or this is a nice little comeback for the month of January. The monthly candle, by the way, is kind of wild. Like look at the monthly candle. It's hard to see with all my lines, but that is, let me just open up a new chart. There. That's a volatile candle. We've had a move of $33 on the SPY. That's like 330 points on the SPX. Yeah, 320, 326 points on the SPX. That's a volatile month. Probably as volatile as what we had back in August when the market was just hit hard in the August 5th bottom. That candle was a monster candle all the way up here. That is 538 points. But yeah, enough to take out the previous candle low and also test and possibly take out the previous candle high. So I could see this type of structure building, something like this, and maybe something like this for support, or maybe something like this for a broadening pattern. But time will tell. Let's take a look and see other stuff. So gold, oil, gold, silver. Gold back up to some recent highs. I'll switch workspaces again. Let me go down the list. So there is my SPY. Let's go to equal weight. Equal weight getting some love. I bought some RSP last year when it was down here towards that 200 moving average. I bought the equal weighted NASDAQ, same thing, down here toward the 200 moving average. That worked out pretty nicely. The Dow making a really nice comeback, honestly. It was beat up pretty badly from United Health Group, found its groove around that 144. And the Dow actually might be, not sure we are for the beginning of the year, but when we started January trading, yeah, I mean, not too bad. I actually think the Dow might be the best performing market so far, just because it had the drawdown before the year started. We had a lot more volatility in the S&P and the Nasdaq, but the Dow's up. I think that's pretty interesting. Again, could be the same type of pattern. Do we hit the highs or test slightly higher highs? Do we hit the lows? Is it something like this? That's a difficult trading environment, but I think that would be something that separates the traders from the bull market geniuses. Russell, 228. Small caps might get some love. We'll find out. Depends on inflation. If we have this as a kind of a building point, I could see the Russell doing pretty well. Russell growth has again shined very, very high. So we pulled back to the 50 period, and then it's back up towards these highs. Value is also doing pretty darn well right off that 200 moving average. Son of a biscuit. That would have been a nice trade. Right off that 200, popped up there about $3 or $4 per share. Not too bad for an index. What else? VIX, 1495. VIX one day is down. SVXY still waiting. DXY possibly pullback. We'll see. If the dollar gets a little bit weaker, I'm just waiting to see where the pullback comes into. So if we go a little bit of a near-term top on the dollar, pull back into this, like I keep saying this level, 106 and 105.50, that to me is a big support zone. So there could be some near-term weakness in the dollar. My concern is that it builds back here off these lows, and then we end up making higher highs in the dollar. Again, if we make higher highs in the dollar, I would expect the 10-year yield to also go with it. So I'm not sure. We'll find out. Oil, a big fat fake out. I really thought that oil, I mean, we had a nice little bull flag here at the $75 zone. It rips up and faded back down. I am not touching oil. If you heard the World Economic Forum with Trump's portion today, he was basically saying, like, shame on you, Saudi Arabia, and shame on you, OPEC, and trying to drive oil prices lower and way lower. So, I mean, he wants energy to be way, way lower. And whether he gets it or not, we'll find out. So it depends on what OPEC does, if they want to hold supply and demand kind of hostage, and we'll see. But there's movement. I just don't know what direction we're really going to get out of it. So I'm staying the heck out of oil for right now. I am, however, in natural gas, and I'm long, and this is out to 2027. My trade is in UNG. I'm trying to get this back up to $21 or $22. It's a nice little trade. I mean, reward to risk is pretty favorable. I just need to see it directionally move up to $23. Gold. Gold has taken out these recent highs. I don't think gold is necessarily, blowout tops, but gold to me would be something like this, or possibly even a previous highs, higher lows. If gold, hits all-time highs and everyone gets all excited, but it comes back down, I could see gold doing this and building and building and building. That would be a really nice accumulation pattern to then see it break the tops and go higher. So I'm not just chasing gold. I'm long gold. I have shares of GLD. I traded a lot of futures last year. I put in some credit spreads. I'm just waiting to see if I get a pullback. But otherwise, I'll just maintain my gold position, and it's fine. Silver, lagging behind gold right now, but I want to see if silver gets up to 32.25. Bitcoin at 105. Somebody asked me this morning, hey, with Trump speaking today, is going to drive Bitcoin higher? I said, I don't know, probably not. I think Bitcoin might be range bound as well. We have highs right here. We have lows right here. If it doesn't break 105 or 106 or 107, maybe some range bound trading. Again, if it holds support, there's opportunities to kind of scalp this and trade it. If we get a breakout above, then we could have this conversation at the 125 to 150 projected level. Without having much of a pullback, I could see 126, 125 this year. That's a pullback into 382 hits the 127. If we pull back to resistance and then hit the 618, 125, 126. On the high end, I'd say 150. If we hit 150K on Bitcoin this year, spot price wise, that'd be pretty impressive. I don't know, but if we go sideways and my moving averages can catch up, then I'll look to kind of accumulate off of the lows again around 90K. I was thinking we may pull back into these zones here between like 90 and 70K, but it seems to be just bouncing back and forth between highs. All right. BITO, I've got some shares trying to take this back up to highs. I think, if I can get BITO back to these highs, I'm going to dump my shares for profit. I bought this thing. Actually, I got into BITO earlier than IBIT and earlier than all the other approved ETFs because this is one that allowed me to trade options. So my diagonal spread worked out really nicely. My long calls worked out really nicely. This trade here, same thing. The shares that I bought, same thing. Like I've been, picking and choosing my battles. It doesn't look the same as IBIT. It doesn't look the same as spot price Bitcoin. So if I get to take some profit at these highs, that would be a pretty nice chunk overall. I have shares of this around like $18 to $20. So if I get to $33, $34, I'll probably just take profit on BITO. IBIT, we're back up near the highs. This is one that I'm just going to continue to add some exposure to it. Let me measure the equivalent here. So this was what I measured last year going towards the 107 to 108 symmetry level on Bitcoin. And it was actually, I'd say projection wise was pretty accurate. So I did the same percentage gain from Bitcoin into IBIT, and I projected the symmetry move, and it was pretty much spot on. As you can see, same thing here, pretty much spot on. So that to me was a good sign of, okay, so we've got a really tightly correlated asset like IBIT that is trading pretty much like the spot price of Bitcoin. All right. So point is this, if it ranges, I will probably add some more trades at the lows. If it breaks and goes higher, I do have a collar trade. So my 67 by 40 out to March, I own the shares at 35. I get them called away. That's $32 a share. I have anywhere between like 400 and 1,000 shares. So if I can make $32 a share and get it called away, that's a pretty good chunk of profit. So on the smaller end, that makes me $12,000 or so, and on the upper end, that makes me about $32,000. So that's not bad, but that's if it gets called away. If it doesn't get called away, I'm just going to keep selling against it and creating more and more collars and going as far, probably delta wise, maybe like a 10 delta on the call side. And then on the buy put, I just want to make sure I'm getting the ability to lower my cost basis. And if it gets called away, it gets called away. But if it does get called away, I'm just going to buy more shares and put on another collar trade. Okay, so that is IBIT. MicroStrategy up to 380. I'm not doing anything as of yet. I've got this thing rolled out to March. Let me see what MSTR's option chains look like. I think my other option is April. So if I go March to April, I don't have to roll it yet. Let me check my expirations. And if I've got if you got any questions, you want to see some charts, you want to see any symbol or ticker or currency or whatever, just type it in the chat. Okay, I use this final hour for a little bit of portfolio review, placing some trades, just communicating with followers. So if you want to see something, let me know. But I'm always interested in taking a look. So I was going to look at MicroStrategy right here. So I have some shares. Just check this account here. So MSTR, have some shares. Credit spreads, ratio spreads, all looking really good for full profit. The other one would be my 310 240. That's my collar trade, which right now 57 days out. If I roll it another month, I might need to wait a little bit longer here, but I'm curious. If I roll this, let me find out. If I roll Shikaka, this isn't bad. If I rolled it another 30 days, that would be crazy. But I could turn profit wise, I'd lower another $5, still get it called away at 310. If I roll it up, I mean, even this is nuts. I could roll this down to 300 and still get $1.50 extra profit out of it. That's not really going to make it. That's not going to sweeten the pot for me. But if I do the 310 by 240, roll out an extra 30 days, I mean, I get $500 more. So, I mean, income wise, like it's not too bad. Let me see what I got in the last roll. MSTR. So the last roll, my break even is 279.86. The last one I got was 496, and now I'm seeing 562. Man, it's not bad. I think I'm gonna roll it. I mean, it looks good. I'm gonna see if I can get like $6 for it, and I'll work it down to the mid price. Let's find out. So MSTR, roll this out to April. 6 not filling. Let's take it down in 25-cent chunks, 575. Okay, we'll try 550. That's the mid price right now. Filled at 550. Okay. This one here, there's my put, there's my call. Roll this to April, 5.70, 5.60, 5.55, 5.50. That filled on the last account, so let's try this one. 550 filled. Okay, and then lastly, this account, there is my put, there's my call. Roll this out one more time. 550 call. Filled. Okay, updating my tracker right now. So 550 update. Rolled to 417 expiration. So sell the 310 call, buy the 240 put, which right now is trading for about $12 debit, because I still have that for some protection if I need it. And then I collected 550 credit. So that brings my break even down even further. 279.86 minus 5.50, 274.36. Okay, so 274.36, get it called away at 310, 35.64. Make 35.64. That's $10,700 for some micro strategy. Just trading some options, adding some income. It's not too bad. With protection plus, getting it called away. The stock's going to be volatile. I'm fully prepared for that. But so far so good. Coinbase, I've got some income trades here. I actually want to look and see. I have more in there. I've got a February and an April. I'll probably just keep those as is for right now. Anything else? Somebody asked about the DAX. Yeah, I mean, I don't know what to do on the DAX other than this thing's just going ballistic. I mean, don't force a sell trade and don't fade this thing, but it's looking a little capitulated if you ask me. I mean, as far as a wave structure goes, I mean, this could be a 1, 2, 3, 4, and 5, and this is that final leg of the fifth wave move. So at some point, do we top out in the DAX for an ABC correction? I would say that's in the cards for this year, but I mean, there's no stopping this thing right now. I don't know what your strategy is, your plan is on the DAX, but I would not be fading this. I don't know why the DAX is going so strong. I think a lot of this is because China is is showing some resiliency and some animal spirits, and that is helping some euro as well, because it's kind of a non-dollar trade. But um, anyway, I don't know. DAX is its own animal, and we are starting to stretch a long ways away from the 200 moving average, and it doesn't happen very often. But when we start to get percentage wise, and I'd say on the upside, not so much the downside. Like our COVID crash here was insane. That was a bit of an outlier. But for the most part, anytime you've seen this asset get double digits above, I mean, that was 9% above the 200 moving average. This one ended up going about 9% above as well. This one's pretty steep. Last time we got that high was around 14 to 15% above. So there's still some ability for this thing to keep surging, and if it does, cool. But I am not trading the DAX. So I wouldn't want to short this. I wouldn't want to call the top. This thing clearly has some momentum into it, and I'm not sure what it is outside of it's a bit of a non-U.S. play. Like money's getting put elsewhere, and if if China can do okay, then Germany can do okay. If Germany does okay, the eurozone does okay. The FTSE's doing something very similar. I mean, both UK and DAX. I mean, they've just been going hard since late last year. Argentina, I'm looking for bigger pullbacks. Heng Seng just hanging out. I'm hoping this is a bullish pattern on China. If this is a bullish pattern on China right here, I want to see a break of this neckline, and then I'm looking long. Exposure that I have right now, it's pretty minimum, but I would say Baidu, Baba. I like those trades. I wouldn't mind looking at some synthetics on those. So Alibaba trading at 86. Again, a little bit more of a volatile play, but something along these lines. Like if we break this high, and this thing has room to go. I mean, come on, man. There could be all sorts of room to the upside. Otherwise, I'm just going to wait and probably position for something like this. So on that note, I actually might look at an income trade here. Can I get this thing down to like $70? Let me see what I have. So Baba, that's a 111. I mean, I like that trade. That's out to September of this year. And a credit spread with a naked put. Okay. So let me see. I mean, there's got to be other expirations that could be okay for income. So Alibaba trading, recent lows at 80. If I want to take some ownership, probably 75 or lower. Let's go out to April. So could I do a 75 by 72? Man, it's like just not really great premium on it. Not great premium. So that's a little sucky. Let me go to another month. That's April. The other one's June. I mean, man, that's a put for whatever I collected it for. Maybe this ratio spread's a little bit better. 72 by 70. $1.28 on income. 83% chance of profit. 95 on income. 86% chance of profit. IV's 39. I don't know. The other trade would be, I mean, it's like, are we going to lift animal spirits in China? If we are, I mean, there's two ways I could trade this. I could take some action now, but I have paid dearly for that by trying to get in early. Like when this thing was going down, I'm like, ooh, support. I'm going to start buying it. It's like I just got paper cutted on some credit spreads and then finally made some money. So it's like time is my friend and technicals are my friend. And right here, it's like I would have no qualms about owning some Alibaba between like $75 and $60, right? So if we're not down there, I really don't have any interest in trying to guess that this is going to be the bottom, because this could just be like the slow, painful death by 1,000 paper cuts until we get into a price that is so ridiculously attractive that it's like, okay, now is the squeeze, And so I'd rather play that game. We had a squeeze here and a big surge. I would come back and fade it all the way over again. I'll just do the same thing. So that looks like a more attractive trade to me. So I guess I'll be patient. Baidu. Baidu is already back down to the lows. This one I could justify. That's a ratio spread. Nope, that's a credit spread. Let me see what this one looks like if I do a BIDU. Ivy rank again, not too impressive. All right, last few minutes. We're up to some fresh highs on the day. We're at 608.52. Are we going to squeeze enough to get to 610 by tomorrow? Let's find out. All right, let me look at Baidu before we go today. What do you got there? 610, 6110, 6115 might be good. I'm not cutting it. It's already defined risk and it's cash settled, Papa John. There's nothing to do. You know, I mean, I'm going to give February a chance to rebalance this stupid, like this stupid market right here that has gone nothing but higher, right? I mean, I get it. Like I'm near the max risk side, but if this market comes back in any way over the next 2 to 4 weeks, I mean, a lot of those expirations you're talking about are like mid to late February. If we fill a gap, or we fill a gap, or we fill a gap, or we fill a gap, that trade is totally fine. We get back to center, that trade's profit. So I'm taking on the risk, man. If it blows it out, then I'll take on the max loss. But I'm going to give it time for right now. Okay. All right. Let's see. What was I was on Baidu. Baidu at the daily time frame at these lows. I mean, that's a pretty good spot to be looking at something. So what do I have on Baidu right now? I have position wise on Baidu. Oops, let me just go for all accounts here. Primarily, I have some shares. I'm down in those shares. I have some positions here. So Baidu, have some shares, have a collar trade. It's a 95 by 70, so that's my protection. 85 by 80 is a credit spread. So right now we're trading at 82, and I would say below, like, I mean, if I could own this at like 75 or 70, that might be okay for a ratio spread and a potential like income trade. Baidu has earnings on the 18th. Let's go out to March or April. I'll go to April. Look at a 75 by 70. I'm not sure if the premium is going to be that good or not. What? That is disgusting. 85 cents credit to own the stock at $70 and change. So if I get assigned, I get assigned at 75 minus 5 minus 84 cents. I mean, I'd own shares at 69.16. I mean, I'd be okay owning shares at 69.16, but the trade-off is like, do I really want to own more shares for a 77 cents credit? I will say this, you know what? It might be more attractive for me to do something like this. If I go to this, and this is a crazy trade here. It's going to be freaking expensive. I might have to look at this trade tomorrow. I don't know if I'm going to get through this in 5 minutes. But we're trading at 82. If I buy a $40 call, that's freaking expensive. But I could offset this pretty easily. If I buy a call for $4,900, that's cheaper than buying 100 shares. And if my break even would be 40 plus 49.65, my break even is 89. Okay, so my break even is 89, which, okay, fine. If I can sell against that, what could I sell against that? Could I sell a end of February? I mean, I could sell the 95 strike for $1.11, and that's only out 36 days. What would that net profit be? So I buy the 40, pay 46.46, get it called away at 95. I'd make 854 by February. Like, that's not a bad trade. But 95 on Baidu was where? 95 on Baidu is back into this noise. What is happening? Spy crossing 609. Holy shit. This market just ripped the last few minutes. We are squeezing hard to that 610 strike. Let me see what's happening on my SPX trade real quick. I'm going to come back to this trade. Take a screenshot of this one. I might just do this trade tomorrow. I could justify that trade. All right. SPY is making a late freaking squeeze to 610. I got to check my price on something here. SPY for a December, it's a 24th. So 1, 2, 3, 4. Right now, I could close for about a 22-cent profit. Nothing like the last frickin' minute of the day to get you some movement. This thing is up nearly $2 in the last 10 frickin' minutes. Like the games these market plays sometimes are so silly. I don't really want to take the trade off right now. But if we hit that 610, level and we fade off that tomorrow, I am going to see this trade be, I'm just going to take the profit. Let me see if I can get out of here for 95 cents. All right, we might as well look and see if this thing will squeeze up here. We've got 2 minutes. Come on, squeeze like the Dickens. 96. Come on, man. It's right there. 95, 94. 90 is like my mid price is right there at 93. You turds. Get up there. All right. If I'm going to take it, let me go 94. It's 96 cents mid. Come on, you idiot. All right, I'm out. Double up alerts. I'm putting the alert in right now. Double up alert. Closing trade. The 124 SPY, 124 expiration, 609 by 611. Call spread and the 601 by 600 put spread, 70-cent net debit. Closed now before closing bell for 94 cents credit. Taking the profit. And the reason why is if this thing comes up to 610 and this is a market maker level, this thing falls. I would imagine by tomorrow, if this is accurate, this thing falls. So I could see market maker stepping in tomorrow and maybe putting in some pressure. But otherwise, they're basically delta hedging and accumulating shares as this thing is ripping up to that 610. But that 610 strike is massive. Coming into today's trading, if you can see this, I don't know if this is bright enough, but you can see that 610 level is really key. So that 608 to 610 zone, we've been slowly working our way up there all day. And we're making that last little squeeze. Look at this stupid thing. Look at that garbage. Right there. Very last second, squeezing right up to that level. The SPY is trading for like $1.99. So if anybody can trade after hours on the SPY, I'll put here, try to close for $1 credit or better. But I'm going to make sure that the 610 liquidity level doesn't become a market maker defense level and top out. Okay, so that trade is done. $1.05 debit actually ended up going 70 cents debit, closed out for 94 cents credit. Okay, so 94 minus 70. Oops. All right. So taking the winner. That is some really silly price action though. I was in this trade with the expectation that this market could flow and find 610 by the day. The fact that it did it end of day is so dumb, but it is what it is. I mean, like I said, I'd rather be out of this trade tomorrow, and I can look back in hindsight and say, oh, I could have held on to it. It doesn't matter. At this point, if this hits 610 and gets hit hard tomorrow, where this is an inefficiency, so if it hits 610 and then drops tomorrow, I'm not giving back those gains. So I'm taking profit on that double up trade. All right. And also, I mean, bear in mind, I can edit this really quickly. If SPY gaps higher at all for Friday's open, look to close at Friday's open. All right. That's issued. So pretty wild stuff on that price action. That's really silly. There you go. If you were just long, yeah, that was pretty good there. So just the original trade was SPY at $1.05 and it's trading for $1.60. Yep, that's a good point. If you are only in the 609 long call by 601 long put, the $1.05 debit is now showing $1.50 to $1.60 credit. That's a nice win. Yep. So right now I see the mid price trading about $1.60. That's a good win. I would be out of the trade, but I added in the extra leg because I thought we're not going to get there today. I try to limit the cost, whatever. So silly little squeeze, but this is why my software is spot freaking on with this stuff. It's like this was a magnet all day, and I just went out to tomorrow. It was cheap enough to trade it, but yeah, I mean, you get moves like this. Like that is gamma squeeze. That is market makers forced to accumulate and buy in order to properly hedge, because right now they're sitting with a ton of orders selling calls at 610. And so what they had to do to offset that is delta hedge by buying a ton of shares probably in these last, 15 to 20 minutes. And this is the nonsense that happens in a short amount of time. Okay. So anyway, good stuff. That would have been, that would have been a nice winner. Like, let's say $1.50 minus the $1.05, 42.8% return. I mean, I still pulled it into 34.3%. It's okay. Okay. And we'll see if the market gaps any higher, because it might. There's still some levels up here, but probably not too much higher than the 610, which is only 30 cents away. So the big thing today was the timing and the fact that you got to that 609.70 by today's close, and it's right before that strike price. That is where options very quickly increase in value. All right. Anyway, yep, we're all good there. One second. Okay. So closing bell, nice little squeeze on the SPY. Baidu, I'm going to look at tomorrow. I'm going to put this in on my to-do list. Let's see here. Baidu. I might look at a, what was I looking at? It wasn't a synthetic. What was I pricing out? I think I was doing like a diagonal. Yeah. Okay. So I'm looking at a 115 of 27, $40 call, and then selling against that a 228.95 call, and for basically $47. But if it gets called away, I make like $7 or $8. So there's plenty of time in the trade. 46.94 plus 40. Get it called away at 95. I'd make 806. So 806 divided by the 46.94. I mean, that's 17% return. And the stock price itself, if it went from 82 to 95, we'll say that's $12.50. So it's 15% of the stock appreciates and 17% if I actually get that thing called away. All right. I'm going to put that on the do list for tomorrow. So Friday. Also, before we go today, if anybody has any questions, let me know. I saw something on Fidelity. See here, Fidelity says it won't let me add the 2 legs you did for the double up. Still try. Don't worry about it. I mean, honestly, if you saw the price where it's at right now, so that's for a key that was asking. Don't even try to add those 2 legs because we're already nearing the 610 strike anyway. So if you didn't get a chance to do anything with the trade or close it in that last little 15-minute squeeze, hopefully we just hang out here by the open tomorrow. I would just close out the trade. If you have the $5 debit, just close it out in the morning for like $1.50 or $1.60 and just take the profit. That actually works out to be a slightly better trade than what I did. So if it was all things being equal, if you can't add the extra legs to it to lower the cost like I did, I would be getting out of the trade for that $1.50, $1.60. You can do that in the morning. I just posted an alert on that for an update too. Okay, there you go. Papa John exited for $1.74. Freaking sweet, man. That's awesome. Oh, there you go. You're out. Okay, I just saw your comment there. So Fidelity, yeah, that's a nice that's a nice accident, right? That's a happy little accident, Bob Ross style. So instead of trying to add to it, you just took the profit at $1.70. Papa John out at $1.74, made 67 cents. Awesome. I've got a trader, Sharon, that emails me all the time, and Sharon got in for like 92 cents or 91 cents. So if she's in the same ballpark of closing out for a nice little win, that's pretty good too. There you go. Good. Okay. So that trade's nice. That is a really, I mean, I this is the power of liquidity levels and the power of like gamma squeeze. What this is telling me that all the market makers that are sitting here short at 610 because they sold a ton of calls, why would they sell a bunch of calls? Because we're sitting at 605, so they sell the 600 and they sell the 610, and what happens? Well, as price starts to go higher and order flows start to go higher, they start to delta hedge and it goes towards that level. And they, as they are accumulating, are probably adding massive amounts of long shares to offset their sell calls. So if they're short, let's say they're short, 10,000 contracts, okay, 10,000 contracts, they probably ended up buying 10,000 contracts here to be delta neutral as it approaches that 610 level. So if it goes through this, they still have the inventory to make a market be delta neutral. The nice thing is if you're in my double up service, this is the garbage that we dealt with through the holidays where none of these levels are getting hit. So this is like a big sigh of relief, like, oh my gosh, finally it's nice to see a liquidity level that the market's actually going after because volume is going somewhere. And this was beautiful. This was a textbook trade that I've seen for the last like 3 years of why I like this software and service, because you can see prices do stuff like this. And that squeeze is really nice. Even though it's dumb, I mean, you'd think like I just watched a Tasty Trade video on the last 15 minutes of the day, and they're like, 95% of the time the market only moves like 0.25%. Well, this percentage-wise is actually pretty big. I mean, what's that move? What's that move in the last couple of minutes? Get this one out of here. That last little surge, the last 15 minutes of trading, and they're talking about from after like 2:45 p.m., like the final hour and 15 minutes. This movement right here, okay, 0.32%. That move happens like, I don't know, 3 to 4% of the time. So that's pretty crazy directionally. Anyway, I'll stop yapping. All right, so I'm going to put Baidu on the to-do list for tomorrow. I added some trades in today. It's a pretty active day overall. I got 40 trades on the list today. I did like 80 something yesterday, and added a couple of hedges on the SPY. Took some nice winners on daily profit play today. We were 2 for 2, which works out very nice. And double up, took a nice little winner on the SPY. I'll always take a winner on the SPY or the QQQ. Let me see what the levels look like on the QQQ today. Okay, also another All right, we might have some room to run in the NASDAQ. These are starting to look like market maker levels. However, the fact that we check this one off the box, we've got maybe this I'm going to look at this trade tomorrow. So if we end up hitting this area tomorrow, I may look at a broken wing butterfly to look at a call fly and see if I can get a short up here towards that 535. So that'd be Qs would be tough to trade, but I can look and see if NDX is something I might want to trade tomorrow. But to be determined. Okay. So, all righty. Yeah. But this is now no big deal. Like my 610 is what I was after. The 600 is what I was watching. Right here, like all of my gamma, all my gamma, all the volume, all the deltas, everything was changing towards that 600 or 610. I didn't take a screenshot of early in the day, but it was basically two giant bars. One bar was way down here, okay, and then the other bar was up here at 610. So price traded at 605 and ended up going up to 610. That is directional gamma. Nice little lesson. And my favorite part is that we saw it ahead of time. The downside was I had such an equal one to the downside that I had to trade both ways, and it would have been nice. And this is full transparency here. It would have been nice had I just traded the the 50-cent call option that is now trading for $1.60. That is obviously a much better trade, right? But because we still had a val level at 600, I couldn't in good conscience just trade one direction when I thought, look, if this market comes back and fills a gap, we're going to 600. But it didn't happen. So I took the trade on both sides, turned it into a profit, but 50 cents to turn into $1.60, obviously that's a much bigger win. So it's nice to get those when they're directional. And we'll get those trades. I mean, I'll have plenty of trades that we nail it directionally, but having that big equal level at 600 and 610, we're trading at 605. It's a coin flip, and market makers took their bets. So they're probably taking all their 600s and rolling them up and limiting exposure. They're probably taking their 600s. They've been buying shares and adding contracts to delta neutral, and they'll possibly defend that 610 handle tomorrow. If we go up a little bit higher, I could see 612 and then fading, but that's tomorrow, not today. All right, we'll see. But I'm just going to put a warning out there. I wouldn't be surprised if the market fills some gaps. I mean, this is really, really silly what this market has done over the last couple of weeks, right? You start on the 13th of January. That is 10 calendar days. And we have like silly, one-sided, bears are absent the entire time, CPI gap, another gap, another gap, another gap. So in what is that? 10 calendar days and only 5, and so we have 9 trading days, and this market has created 4 pretty sizable gaps to the upside. I don't think that's necessarily sustainable. Did the futures market make that rip at the end? It sure did. Look at that last 15 minutes. So here's another spot to watch for tomorrow's price action when we come into, for the last 45 minutes until futures closes from 5 to 6 and we resume. If this goes back down to take out that low, all this was like a little squeeze to get that gamma squeeze, and then this thing might be coming back down towards the what is that stupid VWAP, the weekly VWAP. So I could see some gap fills in the next 1 to 2 weeks. Yep. So pretty crazy, but it is what it is. And if this thing falls back down and takes out the low, and that 15-minute candle is, basically, what's the word I'm looking for? I'm not going to say it's removed. It's just, I suppose the pump price wise is erased, right? If it's backfilled, if we go up and then backfill that candle and take out the low, then I just think that was some pretty heavy delta hedging and squeezing, and then all of a sudden we got some market manipulation where we'll see where price is really going. Next week, flow wise, we do have a lot of stuff. Earnings wise, I think I took a screenshot of this earlier. If I didn't, I will add it. So we have earnings here next week. I would say some of the notables. Let's go to, I don't really see a ton that I like here on Monday. Tuesday, we have more financials, JetBlue Airways, which I have some exposure on, Lockheed Martin for defense, Raytheon Technologies, Chubbs for insurance. I have some exposure on that one. Then we get into Starbucks on Tuesday, which will be interesting. Boeing's always interesting. Cisco, possibly first. That's food related. GM, that is going to be, I don't know if that's GM Healthcare. I'm thinking GE Healthcare. Never mind. GM's General Motors. That's cars. I don't want to trade that. Get into Wednesday. We actually have NASDAQ. In addition to Tesla aftermarket on Wednesday, IBM on Wednesday, Meta on Wednesday, Microsoft on Wednesday, Apple on Thursday aftermarket. Okay, so I'd say Wednesday, Thursday, we got some meat, earnings meat. So MasterCard, Visa, Intel, some interesting brands as well as Mag 7. So things start to get a little bit more interesting on next week's trading. Wednesday, Thursday, with a lot of market cap up for grabs, for better, for worse. We will find out. Okay, I'll let you go for today's final hour. We went a little bit longer, but that was right at the close. That was crazy stuff, and we'll see what happens tomorrow. So I'm going to look at that trade on Baidu. It's right back down towards these major lows in 2022. I hope I'm not just throwing money at a stock that wants to do nothing. But fundamentally, why do I like Baidu? Because it is freaking cheap and is undervalued. And if we have any discount cash flow, I mean, come on, man, give me some upside potential, right? So I'm not necessarily looking to buy and hold it, although I do think if I am anywhere remotely right in the next, I don't know, let's say the next 12 months, can Baidu give us something like this? Right? I mean, I don't have a lot of stocks right now that I could look at and say with, I'd say confidence and technicals that we could have a 100% upside in a stock. Now, there's a lot to ask for that to happen with Baidu, but man, it's technically it's very possible. I'm just like, do you defend the low? Do you defend the low? Defend the low? So I'm watching that stock closely. I hope there's some good gains on it. In fact, I didn't really have China outside of that September move. China contributed very little to my portfolio gains last year, even though I was up a lot of profit. I was up like 50 grand in September, and that probably ended up turning into about $15,000 in profit when I protected some as we faded most of that move. So I'm kind of, reestablishing positions, figure out which ones I like, and I've got, JD is okay exposure. So JD is at 38.70. I've got a collar at 39. So I did the 39 by 30. My break even is 35.92. I'll make some good bucks on that one. So 39 is the call away price. Break even is 35.92. I have 500 shares. I make 15.40, and that's on 3 accounts. So I make 4,600 bucks on JD for a little repair trade. We'll see. So anyway, yeah, I know, but it's always going to be risk. Nobody wants to invest in China, but I'll say if China actually gives the domestic market something to get excited about, then I think Baidu and Alibaba and JD and freaking Tencent or whatever. The whole market would be fine. But you're gonna have to see like around 3, around 4, like China's gonna have to probably go into some stimulus, and not just be vocal about it, but actually put money on the line, and not just ventilate the property market, but truly backstop it. And look, the U.S. has done it for 20 years. I'm not saying it's great. I'm saying that we're running this like massive like debt spiral right now, but nobody seems to give a crap, and they kick the can down the road. So the U.S. can do it, and we've got all-time highs, and we're 63% of global market cap. If China is going to be adding some M2 to the game, into the mix, then we'll see what happens. So anyway, it's not a rate cut, SB. It's going to be a rate hike. They're looking to raise rates. They're forecasting a 25 basis points rate hike right here. 25 is previous, 0.5 is forecasted for tonight. So there could be a rate hike coming in Japan. Again, another thing that could be very interesting. One of the only central banks that's raising rates while others are pausing or cutting. So does that help the Japanese yen in the interim? Maybe. Does that cause a episode of deleveraging like we had in July and August of last year? Maybe. Something to certainly consider. I am trading Japanese yen futures. That's it. I'm trading FXY as an ETF. That's it. But it's looking to be a rate hike. Let's see if they do it. So Eric, on your question on I know it's China, but I'm looking at defined risk. So if I did it with that diagonal spread, it'd be defined risk. Most I can lose is probably about 1% of my account. But if I'm right, I think the return on capital is pretty good. And hopefully there's more of it. So, all right, I'll let you go for today. Thanks for being with me. If you are watching from Financial Wars on the YouTube channel, kindly click that thumbs up button, like the channel, subscribe, all that good stuff. If you're on my personal channel, chrispulver.com or youtube.com/chrispulver, same thing, you know the deal. Hit the thumbs up button, subscribe to the channel, and much appreciated. And we'll be doing it again tomorrow. All righty. Thanks, everybody. Actually, before we go, if you'd like to join my Telegram, I'll post this here. This is my public Telegram for any posts, bonuses, updates, alerts in the classrooms. I do all that stuff here. So if you'd like to join my Telegram or Discord, I'll post those here. Give me a second. So there is my Chris Pulver Trading Telegram. And then my Discord channel, if you'd like to join, this link is going to be good for the day. So if you're watching live, then you're in the right place. But I'm going for a 1-day link for Discord. Chris Pulver Trading Discord. There you go. So if you want to pop in and join, that's great. If you join my Discord, just a quick disclaimer, I don't send friend requests and I don't initiate direct messages. So if you come into my channel, there's always a bunch of scammers lurking in the backgrounds in the direct message world of, WhatsApps and Telegrams and all this other crap. If you're in my Discord channel, it's really straightforward. If you're in my Telegram channel, it's really straightforward. My Discord channel has free group chats for everybody. Free group chat in Forex and stocks, options, futures, anything. I go live on YouTube. If I'm adding blog analysis, I've got some links for education, private instruction, affiliates, and discounts with software that I use. But it's very simple. I've seen a lot of crazy, complicated Discord channels. Mine is not that. I just wanted a place to put all my content in one place or have the links to all my content in one place. If you're in my Telegram, I just post everything. So all my classes, all my services, and also post for some of my colleagues as well. So I did a webinar with Kane Shea this week. He helped me on Tuesday. So you're going to see some of that information that pops up in my free Telegram, but I've got service Telegrams as well. So just food for thought. All right. But you can find me. I'm live multiple times every day.